everyone, Jonathan right here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today we're taking a look at the crude oil futures. Now, coming back from a long holiday weekend, we've got a lot of stuff going on with a hurricane. It's causing a lot of turmoil and just kind of a volatility, I guess is the best way to put it, into the market, like crude oil, natural gas, anything that is involved around that type of area. Now, we were talking about yesterday, or talking about last week rather, how we really weren't going to see the impact of those hurricane movements and numbers on crude oil until this week. So this week's inventories is actually going to be where we see the impact of all of that in markets like crude oil and natural gas. So it could be a little bit of a volatile week as a whole, and we can see that right off the bat. We come off the weekend with just nothing but bullish rallying to the upside. Everything is just a rocket ship pushing higher. There's no reason to believe anything but bullish movement. Everything is pointing up aggressively, and that bullish momentum really gives us a clue that we have potential for continuation. We just need to find the right place. So coming in right off of the morning, we start again in the room at 8 o'clock, and we see a little bit of a flat piece of movement. The market had a really good breakaway move, and then we just kind of ground our way higher. Now we are bouncing off of support here, and everything is looking pretty good for a bullish rise, but by the time we see everything, and by the time we come into the room and get ready for it, we're just a little bit behind the 8 ball there. Beautiful pop to the upside. It tried coming back lower, and this is where things start getting really interesting, because now we can see the sellers are attempting to put in a top. They have a big bull breakout, no follow through. Now, that's not necessarily a bad thing. It just means that buyers aren't interested in buying at the highs anymore. They're trying to buy as low as possible. It doesn't mean that we are in a reversal and we're going to collapse through the bottom. Not in this kind of bullish trend. So, given that reversal off of the highs and that big push back down, we're looking for sellers to get stuck. Right? Now, the sellers, they didn't have very good follow-through either, but when the buyers show up with a little bit of a weak bounce into a doji and a halfway decent-looking bear candle, sellers will likely take that as an attempted secondary low, trying to sell further down, entering in below that little bear candle there. And when that turns straight back up again, that was the clue that now sellers are stuck into the move, and their stops are likely going to be above. Now, their stops could just be above that tiny little candle, they could be above that little poke, or they could be all the way at the highs. It doesn't really matter. We know that sellers are stuck, and if we break above this bull candle, it is off to the races to the upside, and that's exactly what happened for a beautiful rally up. Now, after that rally up, we put just a massive string of bull candles back to back. You've got 1, 2, 3, 4, 5 really strong bull candles, all pretty much closing on their highs, back to back to back to back to back, all the way up. It's a big clue that, well, although earlier buyers weren't that interested in buying into the highs, they obviously regained that interest because this market is a rocket ship now. And really, any pullback that we get is going to be aggressively snapped right back up again with all of the late buyers, right? All of the late buyers or the sellers who just got whipped out, they're going to be chasing the buy side as well. So we see a quick little pop higher. Likely sellers are going to try to put in another high here. They always try to put in that top. They go for a quick scalp down, and that is all they get before reversing right back up again, and that offers up several buying opportunities, and you could even add a couple more inside here for another bounce right back higher. Overall, just looking for the sellers to try to come in and assuming that they are wrong, and then shoving the market right back up. It's the exact same thing that happened back here, except we're being a little bit more preemptive. After such a strong rally up, likely buyers will be a little bit more aggressive, buying into the first bear candle close, buying into the first bull turn higher, buying into swing low traps, you name it. There are going to be buyers that are waiting there to accumulate the pullback, and they ended up with a beautiful follow-up rally to new highs. And then after that rally, we go in towards the lunchtime session here with a nice quick little pullback down. We test into that earlier area of interest. Notice that level of resistance that was put in across the highs, They finally get away from it. They come back and they start bouncing off of it as support with a strong bull bar. Even though we're likely going to be transitioning into a range now, we still have the buy side in our favor, and we're looking to buy in with a assumed rally to a new high once again, and that's about all it got to finish off the day going into the lunchtime session. So overall, a really strong breakaway type day on crude oil, and just a great example of not going against a strong trend. It doesn't so much matter fading the highs of a range or selling those types of scenarios because there isn't a trend. But in markets like crude oil, when you're just ripping higher like this, The only trap that's going to usually take place is when you try to go against that trend, and that's about all of the traps that we saw today. We're trying to sell this instead of just buying along with it. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, a little bit entertaining, and we'll see y'all next time.